Everyone's obsessing over if the Fed cuts in September. Wrong question. The real edge is knowing what to watch after the headline: ETF flows, funding, and stablecoin supply. Let's build your playbook. A gentle Fed cutting cycle typically loosens financial conditions, historically a tailwind for risk assets and, at times, crypto. But the scale of any move will be set by positioning and liquidity, ETF flows, derivatives funding, and stablecoin supply. Watch the tone into late August, Jackson Hole, and the mid-September decision window, and don't trade the headline, trade the follow-through. Where we are now, and why it matters: policy rates remain elevated relative to the last decade. Inflation has cooled from its peak but isn't mission accomplished. Growth and labor data have softened around the edges, keeping a measured September cut on the table rather than an emergency pivot. Translation: the Fed has room to nudge conditions looser without declaring victory, an environment where risk can breathe if data cooperate. What markets expect: without the noise, odds favor a quarter-point move over a larger cut. The message will matter as much as the move. Is this insurance, easing, or the start of a deeper response to slowing growth? Expect probability swings around major data and speeches. Treat them as volatility windows, not crystal balls. Why crypto cares about rate cuts: financial conditions. Lower rates usually ease USD liquidity and risk premia, supportive for assets that need capital and confidence. Valuation math. Falling real yields reduce discount rates, improving appetite for long-duration risk, yes, even in crypto. Risk transfer. Easier policy can shift allocation from cash bills toward higher beta assets, if flows confirm. 3 credible paths, and what they mean for crypto. 1. 25 BP cut, base case, macro. Insurance, easing, growth risk acknowledged, inflation still monitored. Crypto read-through, constructive for BTC, ETH over a multi-month view. If we also see positive ETF flows, stable funding, and steady stablecoin supply. 2. 50 BP cut, lower probability, macro. Signals more concern about growth, labor. Crypto. Possible knee-jerk risk on pop. But if equities wobble on, growth, beta alts can whipsaw. Watch derivatives funding spikes and whether the bid sticks beyond day one. 3. No cut, hawkish hold, macro. Either sticky inflation or a desire to see more data. Crypto. Stronger USD, higher real rates vibe can pressure prices near term. Expect volatility and a tilt back to quality. BTC over long-tail alts. What to watch in the next 4 to 6 weeks: policy tone. Central bank remarks into late August often set expectations ahead of mid-September. Inflation prints. Cool but consistent is the sweet spot for risk. Spot ETF flows. Sustained net inflows are your signal that real money is supporting price. Derivatives funding and AMP. Open interest. With perps dominating flow, extended positive funding can mark froth. Deep negative can signal stress or opportunity. Stablecoin supply. Expanding circulating supply hints at fresh dry powder. Persistent contraction warns of thin liquidity. A practical dashboard. 10 minutes a day. Trend checks. Dollar index trend. 5Y, 10Y real yields direction. Flows. Daily spot ETF net flows. Weekly cumulative. Perps. Funding rate and open interest versus spot. On-chain cash. Changes in major stablecoin free float and exchange balances. Positioning ideas, educational, not financial advice, match horizon to thesis. A policy shift is a multi-month story. Size risk so you can sit through chop. Favor liquidity first. In uncertain macro, BTC, ETH typically offer tighter spreads, Deeper books, clearer catalysts. Stage entries. DCA or laddered orders around data weeks beats guessing the minute. Respect speed. The faster the macro move, the smaller the position. Calendar the catalysts. Don't get caught offside into speeches and inflation days. Bottom line, a September cut would be a tailwind, not a guarantee. Let flows, ETF demand, funding, stablecoins, confirm the narrative. Trade the follow-through, not the headline. For more, do not forget to visit personalfinancetime.com.